In this video, I will teach you how to draw support and resistance. We will discuss the support and resistance levels, lines, zones. You will learn where and how to find it properly. I will share with you a simple technical analysis technique that works perfectly on Forex, gold, or any other financial market. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. I always say to my students that the best time frame for the support and resistance analysis is the daily time frame. The supports and resistances that you find on this time frame are appropriate for day trading, swing trading, and scalping any financial instrument. And once you open a daily time frame, you should correctly choose the perspective, because on a daily time frame you can see the price action for years. And I strictly recommend you starting with the recent price action, and it is more than enough to concentrate on the price action for the last 2 months. Once you choose the correct price range for the structure analysis, you should start analyzing the price action, the historic price action, and look for the levels, the zones that were important for the market participants in the past, for the levels from where we saw significant bullish and bearish movements. These levels will be the basis of our supports and resistances. The first strong resistance that I see is based on that high. We can see that from that price level, a strong bearish movement initiated, and the historic price action shows us that in the recent past for the market participants, this price level was very important. And when we are looking for the resistances, the structures that are above current price levels, always remember that it is highly recommendable to perceive the resistances as the zones. So not only we take into consideration the wicks of the candles, but we will also consider the highest candle close. So our resistance here will be that white area. Learn advanced support and resistance analysis with my premium course. For more info, check the link in the description below. And the supports are all the zones, the levels that are below current prices and that were respected by the market in the past. For example, we have a strong support right here, this price level. From that price level, we saw a strong bullish movement, a strong bullish wave initiated from that price level. And again, our support will be not a single price level, but it will be the zone. And that zone will be based on the wick and on the lowest candle close. So our significant support will be that zone. And we can also see more structures here. For example, we can see that right here we got a significant support. We see that this support here was respected multiple times by the market in the past, and then you can see that that structure was broken. The daily candle closed below that structure. We can assume that after the breakout, the broken structure turns into resistance, and here's our next strong resistance to pay close attention to. A little bit above that resistance, we have one more resistance, the resistance based on the price action right here. If we underline this zone based on this recent price action, we can easily recognize how the price respected that resistance zone. We can spot that 2 times in a row from that resistance we saw strong bearish movements. Then a little bit higher right here we can spot that we have a very significant structure cluster. You can see that in the past it was the resistance, it was the support, and many times it was respected by the market. It is one more strong resistance that we should underline. And so far you can see that we identified 4 strong resistances here and 1 strong support. We identified the supports and resistance levels based on the recent price action, based on the price action for the last 2 months. Because so far we spotted just 1 support, we should definitely look for at least 1 more. And in order to identify 1 more support, we will zoom out the chart. We will zoom out the chart and analyze the longer term historic price action. And again, what we do, we analyze how the price acted in the past and we look for more significant supports. The next strong support that we can find is based on that area right here. You can see that first it was a strong resistance, and here it was respected by the market many times. And here it's quite complicated to identify the correct boundaries of that zone, because we can see a lot of wicks. Here you can see that first it was the resistance, then after the breakout it turned into support, and the market started to respect that as the support. So we will assume that in future that structure will be important for the market participants. And now look at this candle here. You can see that this candle has a very long wick. And according to our rules, the support level, the key support level, is the low of that wick. But how about the support zone? Do we have such a wide support zone here? When you see the wick like that, it is highly recommendable to analyze the historic price action, to look left at structure and see if we have more historic price action to more accurately draw the support or resistance zone. If we analyze the historic price action, we can also spot that right here the market respected that support, and you can see that here in the past from that area we saw a significant price movement. So our support zone will be based on the price action right here. You can see that with this wick the market simply respected that historic support one more time. Here are the significant supports and resistances that we spotted. We spotted 3 supports and 4 horizontal resistances. But one thing is missing here. We did not analyze the trend lines. For a complete structure analysis, for a complete support and resistance analysis, we should also look for the trend lines, because the trend lines are also called the vertical structures. And when you're looking for a trend line, you should look for the one that respected by the market at least 3 times in a row in the past. And analyzing the historic price action, I spotted only one such a trend line. And you can see that here we have a significant low, the low that the market respected 2 years ago. And if we draw the trend line from that low, we can spot this strong rising trend line. This trend line is a strong vertical support. You can see that in the past, this trend line was respected 3 times by the market. So we will assume that in future, when the market tests that trend line, it can be a significant vertical support. That's how a correct complete structure analysis should look like. Analyzing the historical price action, we identified the significant horizontal support and resistance clusters, and we identified a significant trend line. Then, once the market will test one of the structures from the structures, you should look for a signal. If the market is testing a resistance, from the resistance you should look for a signal to sell, while from the support you should look for a signal to buy. If the market violates the support after the breakout, the support turns into resistance, from where you should look for selling. And if the market violates the resistance, from that broken structure we will then expect a bullish movement and the signal to buy. Execute support and resistance analysis with care and attention, because it is the absolute basis of any technical analysis strategy. With incorrect key levels identification, even the best trading strategy will fail. I hope that the method that I showed you will help you in your trading journey. Let me know your this in the comment section if you have any questions. Also, if you want to learn support and resistance analysis and how to trade key levels, do not forget to check my course, the link in the description below. Also, traders, please watch my other videos.